Good afternoon, everybody, and welcome back to Markets for Millennials for the weekly market analysis from September 6th through September 9th, 4-day week. Hope you had a great Labor Day weekend, and we're coming at you about 3 hours after the close of the New York session. And futures have been closed. Everything is closed for the weekend. Obviously, crypto's not, and we'll talk about that in just a minute. But last week, what we were talking about was the markets were on life support. That was literally what the video was called. And we were on, if you look in the center of the screen here where my pointer is at, where the little mouse is at, you see here that we had this red candle that helped us to close into this yellow box that I had drawn. And I had talked about this being a confluence of horizontal support as well as trend line support. And one of the things I had talked about on Twitter was that if you were short from somewhere in this bounce, then this was the spot where you would want to, if you were in profit, that you should take a little bit of profit or at least move stops to break even, consider repositioning. And it turns out that advice was really, really solid. So we had as we came into the week, we had it looked like we were going to break, in fact, overnight, going into Labor Day, on Labor Day, from there, and then going into the open on Tuesday morning. It looked like we were going to break down from here, and I was saying that if we broke down, it would not be long before we got to test the lows, which are around 36, 34 in that area. And it turns out that we retraced and actually closed essentially right at the support line. And so, of course, again, this is where you wait for confirmations. You don't just take breakouts. That's very dangerous. The risk to reward is not very good. And so when this came back and held, then it looked like, because this would have been our third time trying to break through support and failing to close below support. And so when that happened, the first thing that I thought to myself was, if you were going to take a long position, this is probably the best place to take a long position. Um, and uh, and so the best place obviously would have been to put your stop somewhere below this box. Give yourself a little bit of room because it's really tight from the close, if you're trading futures. And obviously if you're buying long positions on like the SPY or something like that, then that obviously affects where you put your stop loss and all that. But in any case, then we got a huge day up on Wednesday, really, really big day up. And then another pretty solid day up Thursday. And I actually think that this candle was up higher. But I've noticed this on TradingView. It's happened a couple of times, like in our previous rise. We were seeing some of this difference, where the candle on TradingView was actually, even though price had come up, it closed a lot lower. But in any case, it doesn't really matter. Point is, today another really big update to close the week. And what's really interesting, there's some. I want to talk through kind of what I think might be going on, with my limited knowledge and limited insight, obviously. Um, but I want to kind of address something that I was looking at earlier as I'm watching what's going on. I'm going to have to redraw this trend line. I kind of drew this trend line on the NASDAQ because I also had this trend line on the S&P 500, as you can see here. And what was really interesting, and let me actually even go back further, because I had this trend line drawn, and we broke down below that trend line on the NASDAQ. I documented that last week, and also on Twitter. Well, in the price action today, especially, you see that we broke back above this this ascending trend line, which would indicate that this was a failed breakdown, and that we also broke out of this descending trend line, and closed above it. And so it's really easy to assume, just focusing on this breakout here, it's really easy to look at this and say, well, we've broken out, we're bullish, we're super bullish. But I just want to emphasize, like, the overall trend is still down. I mean, the longer term trend is still down. This is a counter trend bounce until we obviously confirm to the upside. And in just as much as anybody would want to look at this breakdown and say, oh, that's a fake breakdown, this could just as well be a fake breakout. And so you really have to keep that in your mind. And again, you don't want to just be buying. Like what makes me nervous is people buying into this momentum. That's not really the best place to be buying. Like I said, if you were, I mean, there's no real good spot on the NASDAQ to have placed a long. You're not, I mean, if you were waiting, maybe you were waiting for, this low, which is around 11,771, but we didn't get there. So you've got no business taking a long position here. And so what I was thinking about today is one, the NASDAQ, let me get rid of this for a second. The NASDAQ broke this trend line, but the S&P held the trend line. And so there's a part of me that wants to look at this and say, well, the S&P didn't close below, so that means support held. That means that this near-term uptrend is still intact, and there's no reason to take short positions here, at least if we're looking at this from a technical standpoint. We didn't make a lower low. That's kind of the key idea. But the thing is, to the same token, we haven't broken out. We tested this trend line today and couldn't get above it. And so I feel like we're seeing a very similar thing happen on the S&P as on the NASDAQ. Now, I don't know. I mean, we could, for all we know, next week just bust through this and then try another test of our 200-day moving average and this trend line, which is lining up once again really nicely. And on this effort, on this attempt, if we make it up there, we might actually get through it this time. So we could go up. However, I mean, as a lot of people were quick to assume that this breakdown was doomsday and we're going to go retest the lows, we have to be really careful that the breaking out of this trend line on the NASDAQ, we have to be careful that we don't just assume that price is going to head to the upside, because we've actually got a confluence of a number of things, a number of bits of resistance above. So let me get rid of this for a second. Let me show you on the NASDAQ. Let me just turn on our moving averages so that you guys can all see this too. So we've got kind of the old descending trend line. I'm leaving it there because I want to see if it's going to provide any resistance at the same level as it's providing a confluence right now with this horizontal resistance, which we did break above earlier and had been support. We got this bullish cross. This is the 50 to the 100-day moving average. Broke above both of those moving averages today as well. And so it looks like this is going to be the resistance coming in right around 12,900. And then obviously we've got our 200-day moving average, which is going to be the real test there. If I go back to our S&P chart, we're getting that cross on the S&P of the 50 and 100 today. We've still got the 200-day right above plus the descending trend line, and we've got this near-term descending trend line that we have to get above as well. And so a little bit of conflicting signals, in my opinion, there. But right now, I mean, like we just said, if we haven't made a lower low, then there's no reason to expect that this is just going to collapse back down. We're going to go back up potentially. Now, let me just really quickly look at the Dow and the Russell. So the Dow, we're closing, let's see, the 100-day moving average is at 32,226, and we closed above that, about 20 points above that on the Dow. We still have the descending trend line, wow, look at that. The 200-day moving average is coming right at that trend line, which had been connecting the tops. So I'm going to leave that because it might be relevant. And then the Russell got above both the 50 and 100-day moving average. Still have this descending trend line, still have the 200-day moving average. So that is going to be interesting. And actually, now that I'm looking at this, let me just do this in real time. I want to just see something here. If I take these trend lines, wow, look at that. I hadn't even noticed that before. So the Russell actually found a really, really solid support where if we look at this descending trend line, we didn't break it on the S&P. On the Nasdaq, we broke it and didn't hold it, and on the Dow, we broke it and didn't hold it. The Russell, on the other hand, did hold its breakout from this trend line. That's really interesting. I'm gonna have to keep that in mind. I'm gonna probably flag that so that I can keep that in mind. So why is all this happening? Well, let's take a look at the DXY and let's think about this a little bit. Now I put a green trend line right here this morning, which we actually came back above and closed above. And so as far as I'm concerned, we're holding this breakout. So if I just chronicle this briefly, as price is coming down over here, everyone's calling dollar top. I said, no, there's still nothing to suggest that the dollar is topping, not the least of which is if you just put the 50-day moving average up, boom. I mean, look at, we've been above it for basically almost all of 2022. That's been a really good spot to lean back in when it crosses below that. As soon as we got down there, I was thinking, okay, well, it's about time to reverse. The macro still suggested that, in my opinion, that the dollar was still going to be strong, and it was. So we came right back up as everybody was saying, no, this is impossible. And then let me turn my SAMS indicator on. Once we got up on this candle on August 22nd, I tweeted, and I could go back and look and show you, but I don't have it pulled up. It's on my Twitter if you're interested. But I said you should expect the DXY to consolidate sideways as we just went from the bottom of the range to the top of the range, and we're basically overbought. And so you should expect it to go sideways. And I couldn't have said it better. I mean, we had crazy volatility, but we basically moved sideways, then broke out decisively, and then we started kind of going sideways again, and then broke up again, broke down, and we've kind of settled right above that breakout. And to me, that's bullish. I mean, if I pull this back up, even though we're flashing yellow, so we're flashing into neutral, as far as I'm concerned, this is no different than any of the other times that we went yellow. I know we had some red over here, but I look at this as kind of like our pullback in June, kind of in mid-June, because on that price rise, we came up and made a new high, but if you look, there's no red X's up at the top of the screen, so we're not reading oversold at all. And I've worked really hard to make sure that those oversold indicators are not just they're not just popping up for no reason. And you can see we have not oversold. I'm sorry, overbought. The red X means overbought. If it was a green X, it would be oversold. Let me see if I can go back and find a green oversold so you can see that. Yeah, if you just look right here, green oversold. So obviously, being overbought and oversold doesn't mean that it's going to bounce or that it can't go lower, or can't go higher, or whatever. But that's been a pretty good indicator of where these little near-term tops are going to come in. And what was really interesting is on this move into late August and at the beginning of September, we haven't gotten any overbought readings. And so I think it's entirely possible to believe that as we kind of came and wicked into the middle of the range, and in fact, I can actually turn on the momentum signal line. So we touched the momentum signal line, but we're still in the upper half of the range. So to me, this is still bullish. You can actually see that the volatility range is actually tightening right now, and so that's, to me, signals that we could be in for a pretty substantial move in the coming days or weeks. So what happened was, I think I was going to talk about this and I haven't done it yet. So what happened was earlier this week, the ECB announced an unprecedented 75 basis point hike. I don't think they've ever done that before. And so they did that, but they also opened the door for the dollar, or not for the dollar. They opened the door for excess liquidity to remain in the system. And so for as much as people were making about so I think actually a lot of this had to do with the speculation about 75 basis points. and whether or not people were buying it or not, then we got the 75 basis points, but it actually came off a lot more, in my opinion, it came off a lot more dovish than hawkish. And so, but now actually we seem to be following through the downside. And it's really interesting because today's news, and part of the reason why I think the markets were up so high today, is because there was news out of Europe this week, not just in terms of the tightening, which is kind of one side of the equation. And the other side was that because of the energy situation, European governments are starting to step in and promise relief, fiscal relief, in order to combat the energy situation, the energy costs that are skyrocketing in Europe, which is kind of funny because, like, you would think, let me just, Euro, US dollar, let me just put this up. Where is it? Why? That's weird. Oh, I gotta turn this off. I'm sorry. Pardon me. It's pretty crazy to see the euro back above parity because you would think that fiscal response would generate people selling the euro, and they didn't. People were actually, for some reason, buying the euro. So I don't know. It's interesting to think, is the market looking ahead to more tightening in the European markets, or are they looking ahead to loosening from the Federal Reserve of financial conditions? And that leads me to thinking about next week's CPI, which I believe, to my knowledge, is coming on the 13th, September 13th. I believe that is Tuesday. Could be wrong, but I think it's Tuesday. And what I'm wondering is, will inflation come down at the same rate that it did in the report that we got in August about July CPI? Because if you actually look up gasoline, the price of gasoline has still been falling at a pretty high rate. And so this is a big part of especially the headline CPI. So the question is, I have a feeling headline CPI is going to come in, again, below what it was last month, which was 8.5. I'm expecting it to be lower. But will core CPI be lower? And that'll be something to watch for. In any case, this is a really interesting moment because I think earlier this week, when all of this discussion about the energy crisis and all of the fiscal that would be required to alleviate the energy crisis in Europe, or to alleviate the effects of it on Europeans, there was a lot of stuff about, this is where I kind of, like, I've been a dollar bull for back since October, November of 2021. What's crazy is a lot of people were looking at DXY like up here between 120, 130. And I actually also saw somebody say DXY 150. And so that means people are looking DXY up here. And if you pull back, I don't know how far I can do this in real time, and I'm taking all this time. Yeah, there we go. That's what we're talking about. We're talking about people saying DXY where it was in the 80s, getting above where it was in the early 2000s and getting into where it was in the 80s. It should be insane. It's not like it can't happen. I don't want to say it can't happen, but it's not likely. We could say that it's not likely. So I just think that that's really interesting. And so as soon as I started seeing that earlier this week, that gave me pause as far as like being a dollar bull. I've been a dollar bull, and I still to this day don't see anything in the macro that would suggest that the dollar should top here. But I have to be aware that that's my bias and that I can't expect that, especially when you start hearing the outrageous calls to the upside, or in something bearish like Bitcoin, when you start seeing like 10,000, 6,000, 3,000 calls for those numbers, you start to assume, well, maybe the market sentiment is euphoric in whatever the direction is, and maybe that's going to be a top. And so I'm trying to be conscientious of that, and so I just wanted to share that with you guys. The Treasury yields, I have this little near-term trend line. We'll be watching to see if we get a breakdown of that. I think it's really interesting. We're really close on 10-year Treasury yields to making a higher high. And I'm just going to throw it out there again that when we were right over here, I made a comment that I would expect that we're going to make one more bounce in yields before we actually hit the top. And I mean, just saying, I don't know if we're going to make the higher high, but I mean, we've made the bounce that I expected. So just wanted to mention that. Let's talk about gold. Last week I said if you're a gold bull, you're hoping this is the double bottom. And we've kind of really done a whole bunch of nothing. I mean, if you look at, like price action last week, we were up 15 bucks. And then we had a couple of down days and then up 16 bucks and then down 9 bucks and then today up 8 bucks. And you can see the size of those wicks. We just had a lot of volatility. So gold's indecisive here. And if I go into a different time frame, what concerns me is, I don't even know if this works, but what concerns me is I'm seeing this, which to me is suggesting a bearish formation. And actually, I should probably make this a little bit more shallow, something more like that. So if this breaks down, that's not going to be good. So that's something I want to be aware of. But gold definitely does not look bullish. But I'm going to be watching as we approach this descending trend line. I'm going to be watching to see what happens when and if price breaks down. What's really interesting is this is looking like a quicker, less volatile version of what happened from August 2020 to March of 2021. Happening quicker, a little bit different in terms of the price action, but like just kind of a similar development. We had this descending channel that it looks like gold has been in and will stay in, obviously, until we get a breakout from it. Crude oil, really strong day today, but obviously we had on the 7th, which was I think on Wednesday, we had inventories come out, and it was pretty remarkable, and it just like puked. It was pretty crazy. Not surprising that it puked. You'll notice if you've watched my videos, I had these trend lines were all at a confluence somewhere else. If I just do this in real time, I'll probably do it in just a second. But I just want to show you kind of where things were at. The price of crude was holding right there, which was the lows from earlier this from earlier in August, and then we kind of touched down there beginning of August. And as soon as we broke that, we just waterfalled and puked down. So where this line, I didn't make a new line. I just moved the line down. The line had been about right there, and so I just moved it down to touch the bottom of this wick from March 15th. And then this green trend line I did have right about. Let me turn that on. Right about here. And what I did was I took it and moved it to kind of where we had this pullback after breaking out. So I moved it there, and then I took this trend line, which had been connected to the red wick. I moved it to the green wick just to see what happened. And I basically did what you're seeing on the screen. I just came back like this, took the end of this line, and I moved it down to that green wick. When I came back over after having done all of that, it was pretty remarkable if you just see boom, boom, boom. So, I mean, I'm not trying to curve fit this. I'm not trying to just find bottoms or try to say that this is the bottom. But it's just kind of interesting. I didn't mean for that to line up that way. I was just curious. So I'm going to leave it like that and just see what happens. And then obviously because we made a lower low, so you might remember that something like this was my, or maybe it was like this. This is my descending trend line, and then by rule, when you break to a lower low, you take the trend line off of that wick and you move it to the next wick. And so now this is going to be the trend line to watch as far as a true breakout from this downtrend. So that's what I'll be watching there. And then Bitcoin, just since in the time that we've been recording, if you were watching on the right side, we were in the 1900 range on the day, like to the upside, up in the 21-ish, and then we had gone up another $200 and then come off. So this is a really interesting thing that took place here. I was watching this close from our June 18th low. We actually closed below it on the 6th, so on the first trading day of the week. And I think a lot of people went short here and just jumped in on the shorts because I saw a report that on today's price action, you had tons and tons of liquidations. And so what's actually really interesting is if you pull it up on the hourly chart, let me see here. Let me see, where do I want to go? Where do I want to go? Oh, I'll pull it up on the 1 minute chart because this will be kind of interesting to look at. So price really took off last night, and then we were kind of going sideways for a little bit, took off again, and then we've kind of been mostly in the same sideways range. And so the idea was that right somewhere in this area you had all of these short liquidations that took place, and that's again part of the function of people were just jumping right into the trade to the downside, not really waiting for any confirmation. And so part of what happened today, again, the markets were really eating up the whole like fiscal stimulus for that the European countries were getting together by emergency to talk about, or in these emergency meetings, I should say. And I think crypto benefited from that. And then when you add in the short liquidations, this is basically a giant short squeeze. There's nothing here that suggests to me that this is going to be bullish, but I do think it's interesting that this is like a failed breakdown from the low, and I do think it's interesting this descending trend line, which is marking the bear market, the prevailing bear market trend. We're starting to get really interesting here, or things are starting to look really interesting as we get closer to this trend line. So, watching this range, something's got to give here, and so that's what I'm going to be watching going forward. And then just a quick update on the MRT, which that I've been tracking, my tool here that I've made. I honestly thought when we closed decisively below yellow that we were going to go back down and touch orange. And with today's price action, I'm not sure. I really don't know. What I'm watching for is the first confirmation above the green line. Once we get above the green line, then that's going to be, for me, historically, when you use this tool going back, that's the proof that there's a new bull market underway. So you can go back to 2018 and 2019. Once we closed above green, we went. Let's just take a look here. Once we closed above green, the move to this little near-term peak in 2019 was 248%. If you go back to the 2015 bull market, or 2014-2015 bull market, or bear market, I'm sorry. Even though we did kind of pull back below green, once you close above green, let's do it from here because that's the first place that it actually happens. If you bought there, then all the way up to the peak, it was over 7,000%. So yeah, and in this case, the rule, let me just show you the rule here. Once you close above green, you don't close again below yellow. And that has proven to be true even going back to 2011. So the way that it had worked before is you have to cross, let's see, I guess this is a little bit different. See here, you touch the orange line, and then once you cross above green, you don't go back below yellow. So you can kind of see that there. So let me mark this one. Back from 2011 to our first top was 7,000%, and then to the actual cycle peak was 35,000%. So that's why I use this tool. And so just because it worked in the past doesn't mean it's guaranteed to work in the future. But this is something that I'm watching, and ever since we broke down below yellow, we have not closed below, or we have not wicked below orange or closed above green. And so this is what I'm watching on Bitcoin, and so this doesn't mean that you can't play with positions and take little long positions and things like that. But the conviction gets a lot higher as far as a new bull market is concerned if you can close above that green line. So just wanted to share that. Anyway, if you've made it this far, thank you for watching. That wraps up the analysis for this week. Hope you have a wonderful weekend, and I'll see you guys next time.